Let's now bring in Solus Alternative Asset Management's Dan Greenhaus. It's good to have you here. I joked on halftime earlier as this news was unfolding. Hey, let's talk about the broadening trade.
Sure.
But I mean, this sucks all the air out of the room continuously. AI does, and why investors keep staying with it.
I mean, two things can be true at once. On the one hand, there are other stories that are working. And at the same time, this story is so dominant. And every time we come on the show and we talk about should investors move away from the AI story, the argument I always come back to is just there's a consistent spate of headlines that reinforce the idea that this is the dominant headline, and probably you should stick with it. And to be clear, I haven't been completely consistent about that. There have been times where I've sort of tactically been making the case for broadening out. Solus has...
You've been consistently inconsistent.
I think that's a fair description, Scott. Solus has a bunch of investments in smaller and mid-cap stocks, and so we've intermittently felt like... But when you get headlines like this, as consistently as we get them, it's hard to argue why not just stick with what's working.
Right, because it raises the question, at least for me, can you have confidence in those other areas like you have in this? And it's kind of hard to when this feels like it has this durability to it that the others may not.
No, but I also don't think you need the same level of confidence. So on the one hand, you have this obviously secular story that's playing out from NVIDIA and Broadcom all the way down to the industrials and what we call the AI beneficiaries. And you have enormous confidence in that in the short term here, in the sense that the money keeps being spent, the CapEx, demand keeps outstripping supply, et cetera, et cetera. But again, that doesn't mean that throughout the market there aren't other stories that are working incredibly well that are not. Maybe you don't have the same level of confidence, but you can still have a high level of confidence in those stories.
Yeah, so we're 6,700 now on the S&P. David Kostin at Goldman Sachs raises his 12-month S&P target today to 7,200. He raises end of year, 6-month, and then 12-month out as well. That seem reasonable to you? 7,200, 12 months?
Yeah, I mean,
67 today?
I will remind viewers that my price target coming into the year, not that I publish in the same way that I used to as a sell-side strategist, was 7,000. Obviously, Liberation Day, everybody wavered a bit on that. But I don't think 7,200 in 12 months is a stretch at all. Now, again, there's a lot of things between here and then, as there always is.
Well, that's why, I mean, the number, it sounds like a big number, but from here, I mean, it's not even 10%.
No, it's not. For me, again, you have the tariff story that lingers out there. You have the deterioration in the labor market and the degree to which that might get worse. I mean, but there are always things about which to worry in the macro. And when you look back, we've talked about this repeatedly, you look back over the last 15 years, how many times have people said so-and-so is happening, that means so-and-so is going to happen, and it doesn't. And so right now, I think 7,200 in 12 months seems like not a layup.
You pick at the multiple at all? I mean, if you figure, okay, what's going to get you from here to there? It has to be new money coming in to stocks. Goldman's Tony Pasquarello today of the market itself says, don't fight it, don't chase it. Do I love the positioning setup and tactical risk reward? I don't. With that said, do I think you should be stepping in front of the U.S. mega cap tech freight train? I don't. It's a bull market. The primary trend is higher. I referenced this, paired it with sort of what Tepper said the other day on Squawk Box. I don't really like the multiple, but I'm not going to get in the way of the Fed. I mean, why would I fight that?
Sure. I mean, a couple of things. One, and I mean, Tony's great, and I don't disagree with much of that. I would just say we've been worrying about the multiple for years. And so whether it was...
Well, he's not really worried about the multiple. He's like, I mean, does the setup look great from a positioning standpoint?
Sure.
I don't know. It's crowded.
No,
right?
but my point is when the multiple was 18, we said the same thing. And then it was 20, and we said the same thing. And now it's been 22 for some time, and we say the same thing. There is a hesitancy to a multiple at these levels that investors naturally recoil from. And I understand that. But as any number of people, Adam Parker, myself, have argued on the show, multiples don't really do much for you in the short term. Obviously, they tell you something about expected long-term returns, but in the short term, they're not particularly helpful. And so whether you're 22 times or 20 times or 18 times, as we've seen, that's had no bearing on short-term future returns.
We talk about investors not fighting the Fed. It appears that inside the room, there's fighting the Fed. Like there are members who want, like Stephen Myron, who is speaking today at the Economic Club of New York. He obviously wants, a lot of cuts. And then there are others who say not so fast. I mean, how does that all factor into how we should view the market?
The bias right now is for, we've talked about this for quite some time, the bias is for lower interest rates. When rates were 5.5, there were a bunch of us, myself included, who were saying we should probably be at 4.5, and then we can reassess. And we got to 4.5, and now we're reassessing. And I think my view, as I've expressed on the show a couple of times, is we should probably be closer to 3.5, let's say, 100 basis points. Now we're on the way there. We got 25 basis points. And I think as investors, you should probably expect that. So again, what do I do with that?